The UAE's non-oil direct trade reached 534.1 billion dirhams in the first half of 2015, marking a 2% year-on-year increase from the 521.8 billion dirhams recorded in the same 6 months in 2014. According to a statement issued by the Federal Customs Authority, non-oil imports reached 337.6 billion dirhams during the first half of this year, a 1% drop from the 340.6 billion dirhams recorded in the same period last year. However, non-oil exports from the UAE jumped 28%, reaching 81.4 billion dirhams, with gold exports topping the list at a value of 28.7 billion dirhams, a 35% increase. Native gold and processed gold also topped the list of imported goods in H1 2015, recording 50.7 billion dirhams in trade value, representing 15% of the total non-oil imports. Vehicles came in second place with a value of 24.8 billion dirhams, which was 7.3% of all imports, followed by non-composite diamond, mobile phones, ornaments, and jewelry. Revenues from re-exports dropped 2% to reach 115.2 billion dirhams. In addition, the report noted that the geographical nature of the UAE's trade partners in non-oil sectors was stable, as Asia, Australia, and the Pacific region remained on top of the list of partners with a share of equivalent to 42% of the total trade value, followed by Europe at 25%, the Middle East and North Africa region with 17%, and the American and Caribbean region, which accounted for 10%. The daily gold rate set by the Dubai Gold and Jewelry Group could soon be formally endorsed by a Dubai government agency. The Dubai Gold and Jewelry Group is the officially registered industry representative with the Dubai Chamber of Commerce and Industry, and its rate is also followed by many retailers in the other Emirates. According to representatives of the industry, if a Dubai government agency put its approval on the rate, it would convince all shoppers buying from any store associated with the Dubai Gold and Jewelry Group that this is the official rate, improving the transparency in the way Dubai's retailers sell gold. Presently, the Dubai gold rate is updated 4 times a day and is based on gold prices on the international commodities market on a Monday-Friday basis. The Dubai gold rate is applicable to 22 carat, the most popular form 18 carat, and 24 carat. It is set on a per gram basis and also incorporates a set profit margin for the retailers. Many jewelry retailers in the region or the other Gulf states also take their cue from this rate. According to local reports, it has not yet been determined if the rate will be mandatory for all jewelry operations or operators in Dubai, but sources in the report stated that those not in compliance could be excluded from industry-sponsored promotions. Emirates Flight Catering plans to open a facility to support private and business flights operating out of Dubai South. The area's aviation district said the Emirates unit would build a facility spread across 4,800 square meters, providing in-flight catering and support services. The aviation district is part of Dubai South, a 145 square kilometers purpose-built aerotropolis created around Al Maktoum International Airport, which will be the world's largest upon completion. The majority of business jet operations are expected to relocate to Al Maktoum Airport, which is forecast to experience double-digit growth over the coming years, leading to almost 18,000 annual movements by 2018. The aviation district has spent 1.2 billion dirhams during the past 2 years on infrastructure and ground assets, and an additional 500 million dirhams is designated for next year, with the inauguration of its business aviation facility next month. The 17th edition of the popular exhibition of Indian properties, the biennial Indian Property Show, has officially opened in Dubai, hosting more than 170 Indian developers, including the big names of the Indian real estate construction companies and banks. Indian Bollywood star and the brand ambassador of the property show, Arbaz Khan, attended the opening of the exhibition and briefly visited various stalls showcasing the latest projects of the Indian developers. Commenting on the show, event organizers stated that the exhibition provides an ideal opportunity for expat Indians in the UAE to explore various investment options back home, especially at a time when the Indian rupee is depreciating and FDI flows into the country have significantly eased. Organizers also highlighted that the government of India has recently announced a host of measures to spur the real estate sector, which includes an allocation of $1.16 billion for the development of 100 smart cities. A recent survey also revealed that NRIs in the UAE aged between 18 and 35 account for 43% of investment in Indian real estate. And the top 10 cities preferred for investment include Bangalore, Mumbai, and Pune, among others.
If you want to purchase a property in India and you obviously need to have a look around. You just can't go to the very first developer and then purchase that per property. So over here at the exhibition, we bring in over 170 developers from different regions. I mean, imagine we have different pavilions from north, south, west and central. I mean, where in the world where you can go in and look at over 170 developer properties at one given time. That's something that we provide over here at the exhibition. And not only that, in spite of the whole area of the visitors and everything, but we also have different educative seminar sessions. We have seminars on Vastu, on taxation, on property investment, what are the good, basically the hotspots in each region, which will basically help the NRIs to invest in India and make that firm decision or the right decision before investing into a property.
Bangalore, in fact, if you see in today's market, if you see Mumbai, Delhi, Hyderabad, Pune, compared to all these places, Bangalore is still being very, very subtle. I would say Bangalore market is reasonable that way. And a lot of people, even in India, from Mumbai, Delhi, they look back for investment in Bangalore. One being the Silicon City, and there are a lot of other attractions. And Bangalore is getting, developed. So towards the international airport, there's a lot of scope for development. And in Dubai, especially, there's a lot of potential to buy. So that's how people are looking for investment in Bangalore.
Some top exhibitors attending the show, including Mantri developers, mentioned that the UAE-based NRIs earn in Gulf currencies that are trading strongly against the rupee, and this offsets a part of the house cost, giving them a great advantage. Running until the 3rd of December at the Dubai World Trade Center, the Indian property exhibition is showcasing more than 600 projects and about 45,000 properties, and visitors are also encouraged to attend free educative and informative seminars, including one on taxation during the first 2 days of the event.
Predominantly for any Indian-based developer, Gulf is the majority source of actually giving them, more NRI business. So even 60 to 70% of their business, total business, comes from the Gulf only. The reason being because most of the Gulf, the Indians who are residing in Gulf, they do invest, back home. So that's something which is, the most attractive place for any of the Indian developer. Since past couple of years, when the local reality market is down, most of the the NRIs are investing in back because of the rupee has actually gone down, the dollar has gone up. So and the kind of returns which you can expect in terms of upside is concerned is more back home.
Looking at the today's market conditions, people would definitely would love to invest in India. Looking at apart from the 4 metros that we see today, which have already been developed and saturated, we look at other parts of the the states. Let's say, for example, the developing ones, which are Bangalore, Pune, Hyderabad. So these are some of the things that we are exploring options to how to invest further. Looking at the metros, I feel that it's become a bit more expensive and overcrowded area. So we're looking at new possibilities, within India itself.